Yo, yo, yo. Sunday sessions, you guys can unmute yourselves. So Tom, you can unmute. Can you just try that actually for me? Yeah, safe.
Yeah.
Easy. Yeah, I'm just gonna wait for a couple more people to join. Got 4 minutes, so.
Cool. How you been?
Yeah, not bad, not bad. Didn't know if there was gonna be a stream today, but I also think some people couldn't make Sunday, so I was happy to do like, I don't know, Monday or whatever day works best for anyone. I just want to set it as like a fixed day.
Yeah, that makes sense.
But I'm happy to like it's either Sunday or Monday, so yeah, we'll see.
Cool. You had a good weekend?
Yeah, quite busy. Just doing a bunch of shit. How about you?
Yeah, I'm good, thank you. Quite a relaxing weekend, so
Nice.
ready to get back to it.
So are you currently studying or working, or what's your situation?
I just finished it.
You just finished?
A limbo situation up to uni.
Nice. Whereabouts did you go?
At the University of Nottingham.
Oh, nice. I got a couple mates over there actually. What'd you study?
Economics.
Oh, safe. Yeah, so I guess you're kind of like, are you job hunting at the moment, or?
Sort of very easy at the moment. Doing the trading full time, so see where that goes, and then maybe apply for grad jobs later on down the line. I don't know really.
Yeah, fair.
Did you know in Nottingham?
Who do I know from Nottingham?
Yeah, they go to university of Nottingham.
Well, they're probably a couple years above you.
Oh, okay. Yeah.
So you might not know, but yeah. I went to a boarding school quite in the Midlands called Uppingham. Not sure.
Okay, whereabouts is that?
That's like near Leicester, like it's kind of in the middle. Yeah, just in the middle of Rutland, really. And quite a few of them after boarding school kind of went to Nottingham.
Yeah. A lot of the schools in that area sort of just all flock to Nottingham for some reason.
Yeah. Connor's rejoined. Welcome back, Connor.
Yo.
Yeah, I'm just gonna see who. Like, obviously, I've sent the link, right? I don't know how many people are gonna join. We have 8 people in the squad at the moment,
Nice.
which, to be honest, I already feel like is quite a lot, especially for like answering questions, because everybody will have different questions and everything. So.
Agreed.
Yeah, a couple people have also asked like if I'll do a one-to-one mentoring sort of thing. I mean, thing is, I have such a lack of time at the moment.
Yeah.
I mean, I'm happy to do it, but I don't know how expensive it's going to be. I was talking to Don about it, and like he says, his hourly rate is going to be at least like 1K to 3K.
Oh my god.
Yeah, which makes sense, right? The man like.
Someone like Don, yeah.
Yeah, like I don't know why he would meet anybody face to face or like one on one, but
Yeah, exactly.
yeah, if I was to do it, I'd probably make it relatively much more affordable, but still, it's not going to be cheap.
Yeah, well, you're juggling a lot of things, aren't you? Because you've got obviously training, you've got your job, and
Yeah, it's kind of difficult to balance this with full time, anyways, but it's not bad.
yeah.
Welcome, guys. Izzy and Maui. Alright, I'm going to get started, guys, because 4 people is pretty good. So I'm just going to do a breakdown first, right? And then we'll just do questions at the end, right? So obviously, did you guys all get into Don's position for buys? No? Okay, cool.
What Friday?
So I think we were in buys above 1994, and then now we're down to 1981. But I'll explain those later. Cool. So monthly, obviously, we have 1 week left of the month, 1 full week, and then there's like the 31st, which is the 30th and the 31st. So trading days, we have 7 days left. So obviously, the monthlies come all the way up, right? It's created that high. It made a higher high on Friday. So any given point, this could just be the pullback for the week for us to drive straight up, right? So obviously we filled the range, but you know, the weekly left us a top wick. Weekly is closing, I would say, above this support. If I can put the line, yeah, so above here, I'd say it's pretty strong area of support and resistance, right? So because we're closing there, any given point, you also broke these highs, right? You're indicating that you're very bullish. Any given point, price could come down, bottom wick, flip, and start retesting the kind of all-time highs, which is dangerous because in terms of like anything above 2077, we have no data. So it's difficult to trade that, right, when it comes to there, but we still have a massive range to go before we reach those areas, so that's fine. It looks like the monthly did a fake out, right? We were very bullish for the previous months since November last year. We faked out once to grab here. We needed this liquidity for us to break out of this range potentially, so I'm very bullish for the month. And I'm very bullish for the rest of the year, I would say. But dropping down to the weekly, we closed, right? We closed bullish. You could say potentially we're respecting something here, but we'll see this on the daily. But you've broken the highs, previous highs, right? If this comes down, you know, next week is just, you know, if the next week's candle, let me actually get zoom annotations on. Yeah, so if at any given point next week's candle is like this, after breaking these highs and doing something like this, right? That'd be perfect, right? Because then you're understanding, you're respecting this, and then your next candle going up, I will be looking for bottom wick. I don't know where it's going to tap, potentially down to these areas, right? Flip up, and we'll be gone. We'll start retesting all-time highs. So that's what I'm looking for in terms of the higher time frames. But we're going to be catching smaller ranges in between. So daily, close no bottom wick, right? But where did you also respect, right? You're potentially respecting this area here. What does this indicate, right? This indicates that we might come down first to create that daily bottom wick, weekly bottom wick, before we're pushing up, right? So I'm not surprised if at any given point price comes down here, comes down first, right? Comes down here and then like creates a bottom wick for these candles, starts retesting the highs. So potentially it's just doing something like, say the next daily candle is bearish, closing like this, right? Oh, why is it still green? Let's say it does something like this, right? Bruh, where did that go? Anyways, let's say it does something like this, right? Next candle, I would be expecting, because we're so bullish at the moment, I would be expecting us to still break above, but we need liquidity. And last time we needed liquidity to break out of the range, looking left, potentially tapping these sorts of areas down here, right? So once we re-tap these areas, I'd be looking for potentially a candle which looks like this, opening straight down, right? Potentially we get a closure as well on the daily, so this could look like something like this, where it kind of like taps into these areas, right? And then your next candle, once it kind of comes down first, right? I don't even need it to break it. If it breaks it, even better, right? We might get a wick entry, but if not, you know, I'll be looking for the flip of the daily to start retesting at least these highs, right? These highs up here, and then at any given point, if this breaks out of the range, right? Let's say it does something like this, all right? Let's say it breaks, right? Let's say it breaks the previous low. Then I'll be looking for, again, another flip. Or maybe even just off the rip, but possibly the flip and possibly wick entry, because you're bullish, right? So at any given point you could just start breaking the highs. So that's what I'm looking for in general, right? Understanding that every time you're in this range, you come back down, you fill the range. The range could be down towards 1945, 1938 also is fine, but you will come down, right? I don't know how far down you will come. You might only come down to like, I don't know, towards 54 sorts of areas, but after you come down, we're looking for liquidity to push up above, and this would be a fake out then above this range. Yeah, so if you look at this as a second range here, this would be a fake out for us to go back up. Yeah, So this is liquidity again, but this is what would make sense to me. So cool. Daily at the moment is respecting any given point, going to fill the range back down. Where's the range down? Let's have a look. Last time you closed respecting, you came down potentially these sorts of areas. It's not bad. Yeah, every time you closed respecting, right? Respecting here, came down, you faked out, you filled this range, faked out, filled the range down here. So I'm looking for potential, say around here, filling this range. Yeah, okay, so I'm expecting 1947 to get tapped. Just based on the daily, right? Every time you closed back into this range or respected this range, you closed and you filled this range down to here. Here, every single time. Like even this, right? You came back up again, but you filled it eventually. So even if you had like a sell towards these sorts of areas, right? As long as your stop loss is above the range, I'd say I'd put it like around 1889, or I mean, this is way too high, right? So maybe slightly above like 1890. And then just looking for that to fill the range. But I'm obviously not just going to take a sell here. So we're going to have to see what's happening on the 4. Cool. I want to draw out my 4-hour ranges first. Let's draw out the bottom of this range. I kind of want to see what it's like on the hourly first. Hourly massive fake out above, right? But you're still so bullish. I don't even know if that was a fake out or if this is just some liquidity grab for us to start retesting the highs. There's a lot of things that can happen. I'd wait for the gap to be formed because there will be a gap over the weekend. We're expecting a gap up just due to kind of the war and the news and everything, but at any given point, it could start coming down first. So, and that's what we're expecting for price action, right? Like we're expecting price to start driving down first to form that weekly bottom wick, right? Daily bottom wick, and then at any given point start flipping above, and then retesting those highs. But 4 hours not very clean. Sorry, the hourly is not very clean. Here's okay. I'm just gonna mark up some ranges, guys. Give me a sec. This looks fine. Some pretty chill music right now as well. Okay, I've got one range there. Next range down. Actually, I'm gonna have 2 lines. Yeah, we're also approaching those ranges where we're starting to not have enough candles. So apologies if I don't have enough, but still try to do what I can. It's 4 hour. Okay, cool. Hourly, I would say you're respecting this, but my range on the 15 looks to be 1978. But for now, let's look at this as an area. It's pretty strong, I would say, in the past. So if you're respecting, right, you're still bearish, right? Understanding that we have tapped 1992. I think we tapped 1994, 1997 sorts of areas. And that was a fake out to come back down, right? So at any given point, once you get a closure below certain ranges, you can look for top wicks to start coming down again. I'm relatively bearish, I would say, for the first. I'm bullish for my bias, but I'm understanding that at any given point we need liquidity to drive up and we need to form the weekly bottom wick. So I'm happy to take sells. So Monday, Tuesday, I would still be, depending on what happens on Monday, right? We'll drive Tuesday, but Monday I'm definitely looking for both buys and sells. Cool, yeah, the hourly is respecting this. Or maybe faked out before though, so. But what we were expecting in terms of price was for it to just come up to here, these sorts of areas. And then once you break past 94, like these areas, you just start driving up, right? Retesting to 2009, which was Don's position It's TP 2009, because every time you just broke above, you just started driving. Like, look at this, right? 1994 was around these sorts of areas. You broke above, drove up to 2003. This one you broke up, drove. This one you just drove straight past. Even these ones, right? You broke above, bottom wick here, straight up, like every single time. So we got a fake out, but it wasn't what we expected. We tapped 1997, coming back down. So maybe 1992 is a pretty solid range. Cool. I'll move this to here. 1993, 8 is not bad. Okay, cool. We respected this. Any given point, where did we last respect that after tapping 97, 98? Cool, we're looking at these sorts of areas. I'm gonna highlight this. So 74, we respected here. Towards 74, respected here. 79. 77, 79, 74, and 77. What does that look like here? Cool. We came down, we already tapped 77, right? So this would have been a buy for me, but we tapped, right? Exactly on the dot as well. And then you also came back down, you tapped 74. So I can't get into any buys at the moment, I would say. In terms of sells, what I would need to see, because you also did this, right? You came down, right? You didn't break these lows, you didn't break these lows. In terms of wicks, you also didn't break these areas. But you came down, you rejected all the way back up to here, couldn't take a sell or a buy. But now that you're in this range again, if you come back up to these sorts of areas, and then you start closing, like, let's say you're gonna close, or you're gonna close like this, right? Anyways, your next candle, let's say you come up, break these highs. I wouldn't just take a buy there, because I'm understanding you're very bearish at the moment. But if you get a kind of bearish candle respecting like this, right, then I'll look for potential flips, right? So I'm looking for this, right? Bottom wick potentially. I don't want it to break all these. If it breaks this low, I'm out, right? I'm not going to put a buy stop. But if you kind of break these lows, I'm interested. So as long as you respect 1977, I'll put a buy stop, and when it flips, I'll be activated. And I'm hoping for something that looks like this. So when this happens, I'll have buys towards 79. But let's have a look for sells first. Sells is difficult. You haven't broken this range. I would say if your hourly closes below 77, like a closure below 77, right? I'll look for a top wick and a flip. I again will not be looking for a wick entry, because currently we are very bullish, but we also had a massive rejection towards 97 and 93, right? So I don't know where price wants to go. It's going to range in here, but if it wants to break below 74, if it breaks below 77, right, on an hourly, so for example, you get this next, right? You get a breakout here after potentially tapping these ranges, right? And this wick, importantly, cannot have filled down to 74. There needs to be some sort of gap there, right? I'm understanding every time you came down, you filled the range, right? This, you filled the range. So because if this fills the range, I don't have any positions. But if it doesn't, first thing that it does for the next candle is comes up, creates a top wick, right? I don't even care where the top wick is. I'm gonna have a flip. And once this flips, I will have a position that will run at least to here, which will be my break even, right? And I'll probably put runners, quite far down actually. Why? Because I'm understanding that if it does break below 1970, it will likely come, look at this, it's clean traffic to come down at least towards 62, right? But if we go back up to the weekly time frame, we're expecting, if anything, this next weekly top wick, bottom wick, since we've closed above here, right? This next weekly wick to tap even like towards these areas, right? 65, potentially wick down to these areas. It might even tap in these sorts of areas here, right? So every time it does that, right, it taps into these areas before it goes back up. So potential runners down to, I would say, maybe around here, but you'll just trail your stops in profit at that point. But yeah, sells, I'll need breakouts and flips. Buys, I'll need breakouts and flips, right? Every time you closed above 1983, what happened? You probably, if you saw a celery, you're pretty clean to go up. In this case, you closed and you went up to 87 first. That's 40 pips. It's not bad. In other cases, when you were bullish, right, you respected, and then your next candle came up, still tapped 87, right? So 87 is a pretty good area that you can probably take a full TP at. Understanding that if you do, like, anyways, you're going to be stop loss to break even. Runners obviously towards these areas, 2002, but that's if you don't hit stop loss stop loss to break even on the way down. But yeah, so currently I don't have any like just buys, just sells, but what I will put is sells below here on the closure and buys above here on the closure. But I will need for these buys to be a celery to go up. These sells, I'm pretty sure if you basically get an hourly closure here, 30 I'm not happy with. I would need an hourly closure. Yeah, hourly closure. 4 hours not looking great though. Okay, so cells below here are slightly more difficult because of the 4 hour, but cells below here are fine. So if you get an hourly closure below 74, I mean off the rip, I would say 77, I would need a top wick, and then I'll take the flip if it kind of breaks these highs towards around 83, or like, you know, anywhere around these ranges here. But yeah, cool. That's basically the analysis, guys. I don't have any wicks at the moment because I don't think wick entries have to make any sense currently. Obviously, this, like, in 10 minutes we're going to see a gap, right? So this could completely change. But let's go to some questions. If you guys have any questions, hit me. You guys can also unmute yourselves, by the way. Sunday sessions are just going to be chill. You guys can unmute and do whatever you want.
I would just say I had like sells on my markups because I kind of did my markups yesterday.
Yeah.
I had sells below 70, right?
70.
And then right below there, like sells below there, like closure below there. But do you think it is safe to take positions in this like kind of area where like price can really flip at any point in time?
Yeah, so I would say because of how the daily closed, I'm pretty confident that you will come down first. Right. Even if it's like, unless you gap up all the way and you fill the wick immediately, without like a bottom wick, then it's kind of unfortunate, I guess. But you also daily close respecting. Your weekly needs a bottom wick, right? And for the monthly, you're close to the end of the month. You're looking for some sort of pullback, I would say. 4 hour, you also rejected off of here, so this could have been liquidity for us to come back down. If you get a closure below towards these sorts of areas, then you get like a top wick towards these areas. I'm not getting into sells for wicks. I'm only taking breakouts because at any given point, right, it could just start driving back up. Understanding that the 4 hour has closed back into here, so this could have been a fake out celery to go up, but you're still closing overall respecting 1983, which means at any given point, right, you're just going to come down. And the range we're trying to fill on the daily, right, we mentioned this, every time you close respecting, you fill down to around these areas, right, towards 1957. So this is where I'm looking for us to tap, even potentially down to like 1952 before you're able to go back up. And if not, if you come up first, then I'm expecting some pretty hard sells on the way down. But again, I'd keep in mind that, with everything that's going on in the world, war and everything, you could just, none of this applies if price is just going to shoot up because of another part of the war, and like, you know, certain news has just come out that's affecting it, right? This is just if price is continuing price action, and we're looking at ranges being filled and everything. But yeah.
Right. I think because I'm like used to drawing on the 4-hour and daily, but it wasn't as clean this week. You know, you needed to go down to the 30-day. Ranges, and that made more sense.
I would say if you so daily, obviously closing respecting this. If you got into a sell here, cool, you're pretty chill at the moment, but you know, if anything, this is a pretty good confirmation that you're closing respecting. After closing respecting, I would say, you know, most times on the 4-hour, you know, if you close respecting and then you're back into the range below 1983, every time this happens, right, you need to grab liquidity towards 52, 50, like these areas, right? Even 57, before you're able to come back up to retest anyway. So this, like, if we look at what happened here, right, we were so bullish and then rejected, came here. This could have been a liquidity grab, right? Or it could have pushed down, but we're more in the mindset that as a liquidity grab because your previous 4-hour respected this range, right? And then you came down had no bottom wick, came down, probably could have gone to some buys around these areas, the next level down, right? Next range down. Cool. Holding those at least to break even, I would say here. And then once that happens, I would say, you know, this is then a risk-free trade, because if this was to retest the highs, then you have runners. If it was to come down, then you're fine. But if you had your stop loss below here, I personally, once it came back up to here, I would have been break even. If not, I would have taken, I don't know, whatever. But that's what we're expecting here, right? Like, we're so bullish at the moment, but at any given point, right, it could just start coming down. And it already has come down in terms of these wicks here, but it's rejected, right? Rejected 2 times, didn't make a lower low. So if you do get a closure below, it's going to reconfirm that it's a lower low, especially if these wicks start breaking down below here. That's why I'm saying below here is the cleanest, 74, because then you're breaking the previous wick as well, right? So your overall structure is very, very bearish. And then that would line up with everything, like daily, weekly, and everything.
Yeah, I have like 63 and 54 marked up. So
yeah. But if you do, you know, start closing above, I would say a closure above 93, I'll take off the rip to go up, honestly. Unless like price at this point does this, comes down, breaks these lows, right, and then ranges here and then starts coming up, then I will look for sells, because you're breaking structure, right? But if in general you're still respecting this and then suddenly you just get this breakout, you'll get a bottom wick, right? But then I'll take the flip up. If you celery and then you come down first, like if, for example, you get a bullish candle that breaks above, bearish candle that respects, I'll look for bottom wick entry to go up, but only if this happens, right? You're ranging here, you don't break these lows, come up to here, then you break in back into this area for the liquidity to go up. That's the only way.
And if you're taking the celery up, you would need a third candle for confirmation to take the buys up, right?
Yeah. So the buys up is like, we're very bullish, right? And like with the war, we're very bullish, but at any given point, right, this could be us kind of slowing down. Like last time we had this massive rejection, we came down once only, and then we started pushing up again. This one, we came down once, twice, 3 times, even though we did create a top wick, right? But is this us gonna, like, I'm pretty sure at some given point for the rest of the year, we're gonna retest all-time highs. But to do that, we will need price to kind of grab liquidity to go up, even if it's like on days with news or like wars happening or like whatever. So I'm not expecting price to grab liquidity towards these areas before you're able to push up. I'm expecting price to have enough liquidity currently to break out of the range already, and then once it does that, if it respects, right, or if it creates a bottom wick towards these areas, I'll look for that to go up. Mainly because I'm pretty sure this is enough liquidity. Like, you came down how many pips? like from here to like these areas, right? Like 200 pips. A rejection of 200 pips is not bad, right?
Right.
Yeah. Anybody else?
Solid.
Yeah, I had a question. Friday's sort of price action just kept pushing up and up.
Yeah.
I was wondering, how do you navigate that sort of market?
When it did this,
Yeah.
yeah, I would say,
I wanted to jump on the buys for the sake of it, like FOMO. And
Yeah.
I didn't really have any levels that were hit by the wick entries, I think. It just kept
yeah,
going
yeah.
up.
I would
Not
say,
game plan.
I think me and Don, we were in a call for like ages looking for buys to go up. Basically, once you broke above here, you came down, right? You faked out. I was looking for buys above here anyways, but you didn't give me a bottom wick. I was looking for a bottom wick around these areas. You drove straight up, so cool. My next buy opportunities were potentially when it breaks above the next range, which I forgot where it was exactly, but we had a small range. Yeah, above here. Once you broke above, like here,
87. Yeah.
87. Yeah, what does this look like? Yeah, so once you broke above here, which I think you just did, right? We were looking for that bottom wick again. Didn't happen. Cool. You know, then at that point we were like, okay, regardless, like we're so bullish. I think we got into a buy like here, but then we had our stop loss obviously like all the way down here. But our TP was 2009. But once it came, like we understood this had no bottom wick, right? Once price came all the way back into this range, Don closed full exactly at the tip there. I held because I was like, okay, this could be bottom wick for us to drive up. We took another buy. I stacked another buy to go up to here, and I closed full towards like 1997 sorts of areas, which was fine. But then once this had no top wick, and then kind of respect these areas, I was expecting price to come up, create that top wick, and then I took more buys here because we were generally very bullish. And then I think I lost multiple positions on the way down, and then you wick through here. But yeah, I would say in terms of navigating the buys, you just like on days like this, it's just breakouts, bottom wicks. Like you could have potentially entered here because you broke out of here, right? Broke above the next range. You have no bottom wick, so you're expecting a bottom wick for this candle. So you could have entered like anywhere between 86 and 84. That would have been a good entry, I would say. And then you just hold your stop loss either is the bottom of this wick or the bottom of this wick here. So understanding that if you start breaking below these ranges, it's a high chance that you're going to come down anyways. So it might as well close full there. But your stop loss wouldn't need it to be very big. Like if you say you entered there, like a 70 pip stop loss, I mean, you could have put it here for 100 pips, which is safer. But yeah, I'm working on stop losses at the moment, so I'm trying to make our positions more RR friendly. Well, not RR friendly because for the sake of RR, but like just so that, you know, we can have a better understanding of what price action is likely to do in the case that it goes against us. That's something I'm working on.
Or flips, right? Is the no bottom, right? I know it's like no range to go down, and then you get a bottom wick. Is that the indication most likely of a flip, right? If it respects your ranges.
Yeah,
like,
so I would say, yeah. You go ahead.
Oh yeah, I was saying because I always thought like flips were just like in the range, within ranges. Like it you know, you're on a bearish structure. You sort of see some bullish structure, and then it taps the top of the range, and you can take the sell down with the top wick, or like vice versa, right? So for like, because I see you like do flips within multiple ranges.
Yeah.
So is that with the indication of a bottom, no bottom, or no top?
So for example, right, if price did this, right, full candle pushing up, but respecting 1986, right? Say this happened, your next candle comes up first, right? If it comes up first, cool. I'm looking for some sort of sell towards the top of this range. Why? Because I'm understanding you're respecting here and you have no bottom wick, right? So any given point, this could flip. Because you're respecting this, it shows that you don't have enough volume to push above and continue, right? So we're looking for the next range up, in this case probably somewhere around these areas, right? Look for this entry and then break even when you flip, and then all the way down. usually what we used to do, right, was we'd be looking for the flip here, right, and the flip to come down. But this, we understood, gave us a pretty good advantage point, right? And like the one issue we're currently having is finding out where this level is exactly. But we're pretty much there, which like every time I do the analysis, we're looking at where the kind of levels it's tapped previously, and where we can potentially get that liquidity grab at that exact level for us to start driving, which we're pretty accurate most of the times when it follows price action. When it doesn't, on days like Friday and the whole of last week, it's difficult to get wick entries, because any given point, right, what's to say this was a wick entry? What's to say this wasn't just us driving down? If you were looking at price, right, it drove down very strongly here, broke this wick, and indicating it's bearish, right? What if this was a fake out? You know, you're closing above this range now. Does that mean you want to go up? Like stuff like that. So during the actual day and like Friday especially, because you were so aggro, I wouldn't take any. That kind of goes back to your like how to navigate Friday's price action and all the bullish stuff. Just take breakouts. Breakouts will not do, like breakouts, bottom wicks, or breakout bottom wicks and then flips, and they usually will turn out okay.
Right, that makes sense. And that works the same with like the closure of a no bottom or no top, right? Same concept applies.
So if you get a closure above, right? So you get a closure above here, and then your next candle. Oh, look at that gap. See, we're looking to gap down, right? I wouldn't get into a buy though, because see, what is what we're looking for. If we're potentially getting a closure below here, we're looking for sells to come down, right? Very, very bearish, and this is perfect, right? The weekly is now creating a bottom wick first, right? Weekly has respected, so at any given point there could be no top wick. If you combine these two candles, this could just be the top wick, right? But did you break the previous low yet? Not quite. But I'm expecting this to come down, right, with the daily and everything. But yeah, going back to your question. So, for example, say we get a closure above, right? Get a closure above like this. If you get no top wick and you're just pushing up first, you can't get into any positions. You can't take a sell, you can't take a buy. Why? Because you've closed above, indicating you want to go up, but you've already pushed up, so you have no advantage point, right? Any given point, say you got into a buy here, right? It could come down and retrace before going up, and you don't know how big this retracement is because it has no bottom wick, so it could flip, right? And you can't get into sells because you closed above the range.
Right.
So yeah, that's what happens. So it's difficult at that point. But look at this. This is beautiful. This is fantastic. No buys, no sells, unless you get. You might be able to. Ooh, if you get a 5-minute closure below here, and then your next candle comes and potentially breaks these highs or like taps into these sorts of areas, I might get into a sell. But yeah, are we gonna get no bottom wick, brothers? But yeah, there's price action happening right now. No bottom wick, right? And you fill this area here.
Yeah, that's tricky.
So you can't take anything. Can't even take the flip here. Flip might work out, obviously, but can't take it because any given point, price could just. This could be a fake out for us to drive back up. But now, I'm looking for the buys, right? If we're looking for buys now, I would say buys above here are not bad. I can't take. Maybe I can take buys here. Once you tap into these areas, buys above here is not bad as well. But then your next level is here, so looking for buys around here. But if this flips, if we get a 5-minute closure below 1970, 1969, I'm in. But that's if it flips, right? Currently, price is just clearing out the orders from end of last Friday weekend and now. So just let it do its thing for a while. But I think Don's stop loss was 1971, so he's still in. but it's not looking good. Yeah, he got into multiple positions. Well, we got into multiple positions. I'm not in anymore, but like from here. 200 pips. Any more questions, guys? Questions?
Yeah. I've got a few. So it's a bit of a long question, but basically my understanding of the flips was, let's say like we're bullish, and then we flip. That's almost like sort of a bit more momentum going to pick up, and you're going to drive in that direction. But then I was listening to Wick's streams. He said something that sort of changed my perspective a little bit. I was wondering what you were thinking. So, you know the example that you had on just a few minutes ago when we closed above a certain area, and we moved up straight away, tapping a new upward range. And then when you come back down, you flip. So in that scenario, should you be putting like your TPs at the actual flip? Because sort of, if you think of it as you had no bottom wick, so once you create that bottom wick, then that's almost your liquidity to then carry on driving up. But after you just tap.
Oh, okay. So basically, what Wix was saying, that you had a closure above, you pushed up first, but once you created this, you wanted to get an entry around these areas.
No, as you were saying, let's say we tapped the 1993, we took sales there at the wick entry.
He took sales here after you got a closure above.
Yeah, like we just spoke about earlier. You take sales on the wick, anticipating.
Anticipating this is to come down. Yeah.
So then after we flip on that, should you be sort of looking to manage risk there?
Oh, 100%.
That's like okay, yeah, cool.
Because if okay, so first of all, I would say if you've closed above, it's difficult to get in the sell. But say this happened, right? You closed respecting, and then you came up first, right? Got into a sell here. You'd be fully break even here. Why? Because
that's what I meant.
Because if you come up and re-break these highs, you're just going to go up, right? But you've created this. You're understanding. You're respecting, right? So we're bearish for the short term. You've come up, got into position here, right? Say it pushes up continuously, but it still has no bottom wick. That's fine, right? Because we're anticipating the flip, right? Any given point, this has no liquidity to drive out the range, so this will happen, right? So once you get to this point, there's no reason for it to reflip bullish, right? It should just come down, grab that liquidity. We'll be break even here, like at this point, 100%.
Yeah, because you were sort of saying how, like, as soon as we move up straight away, there could be a load of orders just waiting at that flip, and buy orders waiting at the flip. Getting out sort of pace up there. Yeah,
that's why we're also very like aware of fake outs, because, for example, right, on a day like this, you were very bullish, you came back down, you were, oh my god, this is so bearish, right? Don got faked out. Like, I don't know, like, if he'll talk about it or whatever, but he got faked out here and then started going back up, right? Because we're understanding we're so bullish, right? Broken through the ranges, so we are expecting liquidity. The past couple candles had no bottom wicks. We were like kind of worried, right? But understanding that, you know, price is moving in this direction, it's gonna come down, grab liquidity, it's gonna fake you out, right? This is the high chance of this fake out. So yeah. If I've closed back into this range, potentially respecting this. Yeah, keep going.
Yeah, another one. I sort of seen a few different people speaking about this. So let's say you get to a certain support and you have a few candles printing. Let's say we were sort of at a support and quite a key level, and then would you want the bottom wicks of the next candles to be sort of making higher lows? I see that sort of thrown around a lot, but then how does that play with...
Do you want to draw it?
Yeah, okay.
I think if you draw it, it might be clearer.
Yeah, okay.
By the way...
You're just at this level, this one here.
Cool. Are you bullish or bearish candle?
Bullish here. So like, just come down, we're closing bullish, and we're expecting maybe we turning point here.
We've come down.
Yeah, so we're coming down here, and then we're sort of printing candles here.
Okay, so we're just kind of ranging, like we come down and we're just ranging here.
Yeah. Do you want the sort of lower wicks of like all of these to be creating like a higher low?
Higher low, or do you mean lower low?
Higher lows.
For am I looking for buys or sells?
Buys.
Okay. So once price comes down, right, you're ranging here. In terms of wicks, I'm not looking too much at the wicks. I'm more looking at the closures. As long as the closures respect here, right, I'd be more worried if it like does something like this. If it comes up like this, I'm not looking for a buy because this has no volume to come up. You're also still in this range. I'm expecting a dump. If this happens, I'm expecting this to happen, right? And then if you're doing something like this, for us to come do something like this, and I'll be looking for the sells around here because we're selling. So we're selling off generally, right? We're very bearish. So at any given point, right, this would be a fake out for us to come back down, and that's liquidity, right? This indicates no volume to go up. Like every time you look at this, right? Let me just, for example, like this, right? Trickling down, trickling down, trickling down. Strong bullish up, right? What else is a good example? We're pretty too aggro. Like this, if you wanted to move, you move quick, right? Like look at these candles, right? You move quick. But like this, right? For example, you're trickling up here, go up, spike down, grab liquidity, and then you start going back up. That's your direction, right? Because you're bullish, right? Overall here, you're kind of trickling a little bit, strong push, right? So whenever it kind of ranges, like look at this, right? Ranges, grabs liquidity, strong push up, right? Range is coming down, reverse, right? Like stuff like that. So every time I would be expecting price, if price is bearish and comes down into this range, I'd be looking for either a breakout below here and then a top wick to break these highs, or like in terms of the wicks, I don't think they actually matter as much, just because generally the closures matter more. If you look at the smaller time frame, for example the 1 or the 5, you'll see that the wicks on the 5 are just closures on the 1, right? And you'll see it respect 1 minute ranges. And for example, if you're looking at it on the 15, you'll see the 5 minute ranges. So generally, yeah, I wouldn't worry about the wicks too much.
And sort of a final quick one. You sort of mentioned this already, but like, when we are so bullish, especially so bullish fundamentally, are we sort of not looking for the trampoline ideas?
Trampolines are difficult currently because your only trampoline I would say was here, right? It was 1974, potentially 1977, but you've very filled. You've very filled here. So because you've come up, it's no longer the trampoline. This is your second bounce. Third bounce might not. You might just go through, which is what we're doing. Every single time we're looking for trampolines, we're looking for levels which liquidity is grabbed at, right? So for example, it wants to go up, no liquidity, trampoline down for us to continue back up, right? Either that, or we're going to be trampolining up and then we'll be looking to take profits, like 20-30 pips, because we're understanding that then you're kind of short term wise you're kind of bearish. But yeah, I would say trampolines with aggro days is difficult because it could just push straight through. I wouldn't have taken these.
So on the higher time frames, the trampolines just look a bit like sort of moving in direction, and just, for example, if we're bullish, like really large hot wicks wicking into potential liquidity areas and then continue the drive up.
Yeah, so for example this, right? This, we had a closure, let's say a closure above, right? This wick down to here could have been us, because you also respected, right? Any given point you could start flipping and going back up. So this is just a liquidity grab, but because it's also in the short term, you've come down so aggressively, you don't know if it's just gonna do this instead, like come down and do this and then continue. So we're only looking to take the trampoline until the top of the next range, which in this case probably was only 74 to 77, which is about 30 pips. Any more than this, then you're risking potentially this coming down. Obviously, cool, you came up to around 82, right? But what's to say that it couldn't just continue ripping down? Yeah.
And it's always like the second bounce always higher in this bearish example?
Not necessarily, no. Most of the time you'll see first bounce work out and it's fine. Most of the time you'll see a second bounce and it won't respect and it'll just come straight down. But if it does respect and it starts pushing up, I'll look for a breakout above certain areas to start reversing. And in that case it'll look like this, right? You've come down, potentially salaries to go back up, so something like this. And then again, I'll only be looking to target the next range up, which is this move. So with this current price action, you're looking at this, right? Come down, faked out any given point. You had no five bottom wick here, right? So if this flips, you're looking for those buys to go up, right? But I'll need a bullish candle. Bearish candle respecting, and then for us to go back up, similar to this. If this happens, then I'll look to take probably a breakout, and then I'll look to, this will be the top of my next range, which is around these areas, right, where this wick tapped. Don't know what that is in terms of top of this, like 15 pips, 16 pips. So that's my move, but that's why we had no sells, right? Push straight down, no bottom wick. There's no ways we can. If I would say these now don't make any sense, and it would be only the buys currently. Sells if we get below here, then cool. Because I'm understanding that this is now a wick, right? We need to break the lower low to indicate that we're going to continue. So until that happens, I can't take anything. You could also take potential positions below here on a closure, understanding that you tap at least down to these areas, so around 20 pips. If you do take that, that's pretty clean as well. But yeah, I would say closure below off the rip. I would say here. Sorry, closure below here off the rip. Closure below here, I'll need some sort of top wick. Towards around 74. But yeah, cool. Any other questions, guys?
When you were moving back up, and you were looking for the closure above,
yeah,
the salary, which is respecting, and then a third bullish closure, so you're getting off the second bullish breakout.
So my ideal position, right, would be, for example, get a bullish closure like this, right? I'm not going to draw the wicks, but let's say then you got a bearish candle like this, right? And then after that, you get a bullish candle, but the initial part of the candle is coming down first, and then I'll look for the buy stop to go up.
Oh, it's the buy stop, so the break of the previous highs.
Break of the previous highs.
Got you. That makes sense.
Because at any given point, this could be also a fake out to come down. That's why you need that extra confirmation. Yeah. But yeah, we're evolving. I feel like even my own analysis is changing. I don't know if you guys notice it.
When you say off the rip, say there's like a closure below 1970 with a bottom wick on that closure, you're not really worrying about the break of the current or previous candle high or low, but you're just waiting for that closure below. And
unless you get a closure with no bottom wick, right? So if you get this, right, let's say you've come down like this, right? I'm going to draw this in this case because this is important. All right, let's say you get this, right? What is this indicating to you, right? Structure is bearish, right? You've come down, you've broken these lows, indicating direction, right? So your next push below here is just going to create your next lower low, which is why I'm not expecting a top wick. I'm not expecting a top wick because you've already broken this, right? So I'm going to expect price to create that lower low first before retracing, right?
That makes sense.
And then once it retrace, I'm out anyways, right? I'm looking for this push, and this push usually will tap another level.
That makes sense.
Which is why I'm also kind of looking for sells below 70, 72, because I'm understanding that now, once you break this, you're gone, at least until 70, and then once you get past that, you're really gone.
And are you saying that because the momentum is pretty obvious there, whereas usually, like, say in the playbook, there's like you want to wait for the break of the previous or current candle low in some scenarios, you know?
I would say in this case, right, if you're breaking below 72, let's say you get a break below 72 like this, I'll look for a top wick, because I'm understanding that, you know, to come all the way down here, cool, this could be a liquidity grab for us to come down, but at any given point, right, you could be, you know, just kind of trickling up before you're able to come down. But once you break below this, and I would say maybe actually I might move this down to like 69 here, 10 pips, right? But once it breaks past your second range, right, you've broken past this low, which I'm mainly looking at. Once you get past this, I'm looking for it to at least tap here, 68.7. So at any given point, you could just start breaking into these ranges, which is clean traffic going down, right?
Yeah.
Which is why I wanna capture this, because this is very nice. And I'm also understanding that if it does do that, it's creating that lower low, so it's not going to stop until it's like hits the next level, which either will be at 68.7, or it's going to be at your next, you know, minor support level on the 5, which I don't know where it will be, but just based on the wicks, I mean, somewhere around here or somewhere around here, right?
Yeah.
So yeah.
Sweet, thank you.
Yeah, no worries. But like, if we get a fake out like this, right? If this now closes below like this, I would say. So this is your level now. If it closes below there, right? You could anticipate this, because this candle had no bottom wick, right? You don't know at this current stage. This is why we don't have any trades here, not taking the wick or anything. It's because at any given point, this could create a bottom wick for this candle to go up, right? Broken back to this range, closed above here. Every time you got a closure above here, you filled this range. You haven't filled this range yet. If you filled this range already, and then you're coming down, breaking below here, could potentially get the celery to come down to fill these ranges. But because that hasn't happened, you don't know what's happening. So at any given point, there's so many things to look at. Like, you could be looking at this 5-minute range, like the 15 close. Where did it close? Closed like this, right? So you could be looking for the 15 flip to come down, because the 15 closed below here, create a bottom wick, pretty nice wick fill. But at the same time, you only have 5 minutes left, right? So what am I looking for in terms of this 15? This next 15, I'd like it to close potentially bearish, but respecting something. But I'm also seeing that if you look at this 15 could have closed respecting this. So at any given point, you could just create a bottom wick and then start flipping up, which is why I don't have any trades in this area. It's too many conflicting time frames. Once you get down to here, or once you break above here, you're chill.
Sweet.
Yeah, does that make sense, guys? Maui, you got any questions? Welcome, Zay, by the way. Welcome to the streams.
What's up?
Yeah, we all good? Oh, somebody's on the chat.
Well said. Very well said.
Safe. Cool, guys. I'm probably going to end here. Yeah, just be careful. I would say trading Asian tonight might be difficult until you get to these key areas. But yeah, just be careful. Just start, like, really look for all confirmations on every single time frame. Like, it's difficult to trade anything right now with price. I don't know if this is going to be a continuation of price being extremely aggro or what it is. But yeah.
Thank you, Elvis. You have a good night.
Yeah, no worries. Cheers, guys. Cheers for coming by.
Yeah, thanks, Elvis.
I'll see you guys
Appreciate it.
normally for tomorrow anyways, right? So
Yeah.
it'll be live stream, but yeah, sounds good. Have a good night, guys.
Sorry, quick one. Are these
yeah.
part one's going to be recorded by any chance?
Yeah, so I'm recording this on YouTube at the moment, so it'll be available. I'm just gonna list it later. It's just not live for them.
Cool.
Yeah.
Cheers.
Cool. All right. See you guys. Have a good night.
Thank you.